Hello everybody and welcome to the market briefing for the weekend, Sunday, September 11th. We're going to take a look at the markets, see what's coming up for next week, see if there's any opportunities. So let's get right into it. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions and are not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. Okay, so coming up this week, not a lot happening tomorrow on Monday. We have the 10-year bond auction. That's about the biggest thing. This market has been to a degree driven by bond yields. The equities market is really watching what the bond market and the bond traders are doing. So. And the 10-year bond is one of the most important ones. So they will be watching this. It comes out at 1:01 p.m. So if you see the markets make a sudden move at that time, that's why, because of this bond auction. All right, so you can see on Tuesday, I don't think I need to tell you that this is the big one. The CPI, Consumer Price Index, we get this once a month. It's always really important, or at least these days when we're all watching inflation, it's really important when it comes out. So we get the Consumer Price Index and we get the core CPI. The core CPI is the one that the Fed pays more attention to. It excludes food and energy. So so this is August data. And we've got to remember that energy prices were pretty high in August, so I'm not sure if we should expect this to come down much, at least not the non-core. We probably shouldn't expect to come down much. Be interesting to see what happens with the core. On Wednesday, we have the Producer Price Index, another inflation measure, this time with producers and wholesalers and whatnot. So we have the PPI and we have the core PPI on Wednesday. On Thursday, we have retail sales. That is, of course, an important indicator on the economy. If retail sales go up a bunch, that means that the Fed is failing in their attempt to slow the economy a little bit. If retail sales goes down a bunch, that wouldn't be good because it means that the economy is slowing too quickly, and the market will probably go down on that. We kind of need the Goldilocks print. We need retail sales probably to come in just slightly below last month's reading. And then on Friday, we've got a few important things going on. We have triple witching, also known as quad witching. When index futures contracts, options on index futures, and monthly equity options contracts all expire on Friday. That always brings in some volatility. Often brings some volatility in the week before, and definitely coming into the close on Friday will definitely bring in some volatility. And interesting things can happen depending how unbalanced the market becomes after all these contracts expire. Interesting things can happen the week after triple witching. Also on Friday, we have the University of Michigan Consumer Sentiment, which is closely watched. We want to see is how confident is the consumer. And again, here is kind of like, we don't want them to be too confident, and we don't want them completely lacking confidence either. We just want them to be maybe just a little bit less confident, so they're spending a little bit less money, and then inflation can come down. And going along with this, we also have U of M inflation expectations. So that is it for all the macro coming up this week. Let's get into our earnings, of which there are hardly any. Earnings season is winding right down now, and we'll be looking forward to the next earnings season in a few weeks. So this week, there's really only two that I think or anybody's watching really, and that is Monday after the close we have Oracle, And then on Thursday after the close, we have Adobe. And that's really all I see all week long that, is worth paying attention to. All right, so we're going to take a look at the markets themselves now. We'll look at the major indices, of course, like we always do. We'll look at some important commodities. We'll look at individual sectors, and we'll see if there's any nice setups. Not a ton of setups. There are some, and there are some things to watch. Definitely things worth watching. But for tomorrow, I don't think there's anything really, high on the hot list. But as we get through the week, I think there will be some nice setups and things we want to keep an eye on. So let's take a look. As always, we'll start with the S&P 500. That's not the S&P 500. Here we go. So this is SPY representing the S&P 500, and you can see, we had quite the change of character this week. It's holiday shortened week, so we only got 4 days, right? So this red candle here is Monday, and you can see we bottomed out. Now we had come down into this support level at around 390, and an important support level. And it had acted as resistance in the past and support, and you can see, kind of support here, although a little weak. But we've definitely, this is definitely an important level, and it held again as it should. And you can also see we've got the 618 Fibonacci right there, and we had this trend line also in that area. So, this really needed to hold. It was a very logical place for us to bounce. If this hadn't have held, particularly on Monday, if this hadn't turned around on Monday, we'd probably be, down in this 370 area by now, and wondering if we are going to come and test these lows. But that's not what's going on. We made a nice move up here. We had a really strong day on Wednesday. Another, pretty strong, although we did gap down on Thursday, but we regained it, which was really important price action there on Thursday. That really confirmed that the rally is on. And then we had a gap up on Friday, and we continued to move up. And now we're into this resistance level at 407. Okay, you can see that 407 level is the bottom of a couple of consolidations, from the fairly recent past. And you can see, it acted as a support and resistance back over here in May. So I think we should expect to see a little bit of consolidation down here. I think we can get rid of this. This gap is now closed as well, so we'll get rid of that one. And we have left a gap behind here on Friday, so let's mark that gap in. We'll definitely want to know that that's there. So there we go. So this will probably, if we get a pullback here, the top of the gap often acts as support. If we go into the gap, it probably gets filled. But not all gaps get filled, so we don't have to worry about it too much. So there is some macro stuff that's happened over the weekend. Apparently, the Ukrainian army has had a major counteroffensive in northeastern Ukraine and taking back a bunch of land, and the Russians are on the run. Not sure how that's really going to affect markets. I imagine it will have. It's such a tough call. I think it really depends on what Russia does next. With regards to equity markets. Now, in the energy markets, I still need to give this some thought on how it may affect energy markets. I don't think there's really any change to sort of the macro on energy right now. But it could have a positive effect on, and by positive I mean a downward price effect on agricultural commodities and fertilizer and things like that. So we could see, and none of these markets are open, none of these futures markets are open yet, but I think we will see some downward pressure in our agricultural commodities in that sector come tomorrow morning. As far as the equity markets go, with the SPY, now with that CPI on Tuesday, us having had a really nice run here for 3 days, I'm expecting to see a little bit of a gap down and maybe even pull lower on Monday. I think we've had a really good run. I think that the market, kind of figured this is overdone, is maybe a little bit bullish on the CPI number. But I also think they're going to look at this and say, you know what, we've run too far. We've got that CPI tomorrow. It's time to take some money off the table. Time to take a little profit out of this. So I would not be surprised if we print an inside day on Monday, meaning our range will be between the low of Friday and the high of Friday. I don't see us breaking out of this tomorrow, and I think our risk is actually to the downside. I think the lows from Friday are going to hold, and you can see we've got the 50-day moving average right there. We've got the 100-day moving average is there as well. And we're currently above the 21-day moving average. Maybe it would be really nice if we could hold above that tomorrow, and then if we get a good CPI print on Tuesday, we can get back up here. We can get through this resistance level, and then we can start attacking the next resistance level up, which is in the area of about 415. So that's my expectation for tomorrow. And everything else, everything after that, everything for the rest of the week really depends on that CPI number. Where is inflation coming in? So the Qs, very similar price action going on in the Qs. You can see that we had a good strong week. They've come up. These have now just closed that gap as well. You can see stalled out right at the 21-day moving average, and slightly above the 50-day moving average. Nice to see it retake this old trend line that it had broken. So we'd like to see that hold. But again, don't be surprised if you see some sideways action tomorrow and even a little bit of a pullback. That shouldn't surprise us at all. Tomorrow's, I think, a day to kind of kick back and come up with some ideas and think about, what are you going to do if the CPI, if we have a really good inflation print and inflation comes down and the market starts to run, what are you going to do then? Do you have stocks you want to add to? And what do you do if it's a bad print? What if CPI jumps up? The market will definitely come down a fair bit. Almost definitely, come down on a really hot CPI print. The market will be coming down and testing these lows right here, within a day or two of that print. Think about how you're going to react to that. Tomorrow is probably a day to kind of sit on your hands, I would think. Let's look at IWM, the Russell 2000 small caps. You can see that this, of course, also had a really nice run. It's run right into resistance, and also a downtrend line there. Pausing there. Again, I think we see some sideways action, at least for one day, until that CPI comes out, and then, then it's a bit of a coin flip from there, isn't it? What else? Let's look at the volatility index. So you can see with the market moving up strongly, we broke out the bottom of this bull flag that we were watching. So this is great. That's what we want to see. We want to see VIX moving down sharply. We've even come down below that old trend line. Next stop downward here, if we continue our way down, is this gap. Will it find support at the top of the gap? Kind of looks like it might. But again, I think that really sort of depends on this CPI print. If the CPI print comes in just right and the market continues to rally, we're going to come in and close this gap on the volatility index, and then maybe even start testing 20 here. The 10-year yield. So remember, we have the bond auction on the 10-year bond auction on Monday. So we might get resolution of this base that is being built here. At least it stopped going up, which is great. But this is a fairly bullish pattern. You would expect this to break out to the upside, and we don't really want to see that. Not if we want to see the equities market go up. At least if it does break to the upside, there will be some resistance at this previous high here in around 348. Let's look at the dollar index. So here you see the dollar index, and this rolled over. This broke the trend line on Wednesday. had a very indecisive candle on Thursday, and then rolled down, went lower on Friday, but found support and bounced in around this 21-day moving average. We want to see this dollar index continue to the downside. Now, if the market thinks that whatever's going on in Ukraine in this offensive, if they think that's going to be long-term successful and potentially bring stability to Europe, I think that will help bring down the dollar index and maybe down into this lower trend line here. But we'll have to see how all of that pans out. The other thing we want to look at while we're here, this is our dollar cost averaging system, and you can see last weekend we were talking about how it had started flashing warning signs. Hadn't turned 100% red because the MACD had not crossed down yet, but we did come below our 20-week moving average. Well, we are now back up above it, so this is great. This is a nice reversal. I really like this set of weekly candles right here, and you'll see that it looks the same in all of the indices. We'll go to the Qs now. Very similar. In fact, this is in the Qs we have on the weekly we have a bullish engulfing pattern. So that is nice to see. And again, we've turned green. And in the SPY, the SPY is also green, and you can see on the weekly we have a bullish engulfing candle. And this looks quite bullish here. So this is the all clear to continue with your dollar cost averaging. And again, this is dependent. We can turn red again at the end of the week if we get a bad CPI print. It's likely that we will go back below that 20-week moving average. But so far, everything here looks good. What else did I want to show you guys? Let's see. Gold, not much going on there. Oops. Here we go. Yeah, gold, I mean, it looks a little bottomy here, but it's not really, it's not having much luck going up. GDX, the gold miners, though, is definitely looking stronger off the bottom. So, maybe there is going to be a little something in gold. Silver coming up nicely off the bottom. Copper, though, was looking a little indecisive on Friday. That's not the strongest looking candle there. There's a big selling wick on top of that. So this almost looks like it's ready to put in a lower high and roll down, and then it would be testing this low again. So not exactly what we want to see going on in copper here, because if copper's going up, it's basically generally good for the rest of the market. DBC, our general commodities index. Last week this broke down quite a bit. With oil breaking down, this broke down below the 200-day moving average, below that trend line on this channel that we've been keeping an eye on. But you can see Friday it clawed back and got back up inside that channel. So it'd be interesting to see, if this continue up. The oil futures market is not open yet. But we're going to look at the oil futures, or we'll look at oil in a sec, and kind of ponder what does this Ukraine situation do to oil. DBA is our agricultural commodities. This is the one I expect to see big movement out of tomorrow, if the market is pricing in what's going on in Ukraine. And I think that we'll see this come down. If the market is bullish about what's going on in Ukraine, we will definitely see this ETF come down tomorrow, and maybe even test this low here in this 50-day moving average. So if you're in agricultural commodities, I think you want to be paying attention tomorrow. So crude oil. So like I said, I think that this Ukraine situation could have an effect on crude, but I'm just not sure. I'm not sure which way it's going to go. I'm going to let the market tell me that, and then I'll figure out what I'm going to do with my energy positions afterwards. So you can see we've had a couple of nice days in crude. We've regained all of that big one-day drop. You know, we're still down a lot over the last 2 weeks. Still got a lot of work to do here, but I can definitely see a path for crude oil to at least return up to this 95 level, and maybe attack these two highs right here. You know, by the end of the week, perhaps. But again, I think a lot of this is dependent on what's going on in Ukraine. XLE was also made a turn and moving its way back up. You can see it's stalled out here at these two highs. A little tiny bit of a resistance there. If crude is moving up tomorrow, XLE will move up as well. XOP, the oil producers. You can see it's trying to regain that trend line after breaking down through. A bunch of very indecisive candles here and a lot of gappy action over the last few days, which is not ideal. So it'd be nice to see if this had just a nice strong, you know, open and continued up and then close on the highs kind of day. That would make me quite a bit more bullish on this. OIH is the oil services ETF. And you can see it's a little gappy as well. Came up through this resistance level and closed well above it, so that's nice to see. You know, it's going to find some resistance up here at this little series of highs when it gets there, but you know, maybe one more up day and a little bit of consolidation there before breaking through. Nat gas. So this is in the whole energy complex. This is the one that is most concerning if you're if you're bullish on energy and some of the commodities in there. You can see that we broke down out of that consolidation near highs with that big red candle, and we're now building a base. We're consolidating here. However, this is basically a bull flag, or a bear flag, right? We would expect this to break out the downside of this and continue lower. So if you're playing energy, you don't want to see this break out to the downside of here. You definitely want to see this bear flag fail and we break out to the upside. A couple of the stocks that were in Magnolia Oil and Gas, it's recovered some of those losses. We need to see this recovery continue. And EQNR. This is the Norwegian oil and gas company. You can see massive gap down on this one. It's gone back into the gap, which is great, but looking a little indecisive in there. This trade, I think, is sort of on its last legs for me. If we fail out the bottom of this gap, I'm gonna bail on this thing. There's some stuff going on with Europe and putting caps on profit margins and things like that of these companies. I think it's just absolutely ridiculous. Because this is a European company, this EQNR, it will be affected by some of this stuff. So yeah, we might have got whacked by some of the macro on this one. TAN had a really good week. There were lots of the solar stocks did really well. Had a really nice strong move up. We've come into maybe some minor resistance up in this area that it's going to have to break through, but we are near highs on this one. So if you can find any plays in the solar space, this looks to be going higher. First Solar is one of the big companies there. It's one of the leaders, and you can see that is essentially very near all-time highs. However, we have this indecisive looking doji here and a bit of a hanging man. So not ideal. This does look a little toppy here. So we really need to see a green day on Monday. Sunrun, another one of the big solar companies, and you can see that this is very near its, I believe, all-time highs on that one. Oh, no. Whoops. Okay, yeah, this is definitely coming into some resistance. And you can actually see, it's getting a little bit of resistance there. Off of around that level right there. and you should probably find some resistance, a little bit of resistance in around there as well, and around this $40 level. But if it can get through, if it can break through these two levels here, I think it's got a good shot to run up to you know, at least 50. So this is something you probably, this one's probably want to keep an eye on. You know, this could break out tomorrow, you know, or maybe it continues to draw a little bit of a bull flag for a few days. I think that would actually be better, considering that it's already had quite a nice move from, what were we down here, from 31 up to you know, close to 39. That's a fairly strong move in 3 days. So a little consolidation here would be healthy. But definitely worth keeping an eye on. You know, maybe a bull flag might look something like that, and then play the breakout of the bull flag. So yeah, I'll be keeping an eye on this one. Okay, yeah, that's it for energy. So let's move on to consumer discretionary. We can see that this put in a nice little double bottom here, and on this would have been what, Monday? Yeah, Monday had a nice reversal and put in a hammer candle, and then off to the races since then. This looks like it's going to go higher, but again, I think, you know, with the CPI and everything on Tuesday, I think that gains for tomorrow are limited on this. Industrials. Very similar action, I think it was, to yeah, you know, nice little rounding or kind of U bottom here, a little bit of a gap up on Friday. I think we're set up here for a little bit of sideways before going higher. Financials had a nice strong move off of very similar double bottom, very similar to discretionaries. Same deal here, right? You know, probably a sideways day, maybe a little bit of a pullback day. You know, maybe this one even fills this gap. But good to see move like this in financials. It's hard to be bearish on the market when you're seeing a, you know, nice strong recovery in financials like that. Technology is slightly underperforming some of the other sectors, but making that move off the lows. You know, making this swing low here. We've got a lot of moving averages overhead though, and you know, a lot of resistance overhead to get through. There's still a lot of work to do in the technology sector, and there's even more work to do in the communications sector. But this is very positive price action. I think I remember saying, you know, being concerned about coming in and testing these lows. I was talking about that last weekend. We did come in and test, and you can see we bounced, you know, almost to the penny on that, and then, you know, had a couple of nice days. We're right at the 21-day moving average now. We've got to get through that and the 50, and then we've got the 100-day overhead. So there's still a lot of work here, but we're coming off these lows, and that's the important thing. So looking at some of the stocks in those last two sectors, in technology and communications, we'll start with Apple. Apple may be putting in a little bit of a bottom now. You know, this is relatively weak compared to the rest of the market. You know, if we go and look back at the technology sector, and you know, look at some of the candles that this printed. Okay, you know, these are three pretty decent candles here. Then we go to Apple. You can see this price action here was nowhere near as strong, and we have stalled out at a bit of a resistance level, although this is minor resistance. So we want to see this continue higher, but you know, there's overhead here. We've got all these moving averages overhead. We've got some more resistance, you know, probably in around this level. So some work for Apple to do. Amazon made a little bit of a move up, continues to move up through that gap that it came down and essentially filled. I think this has now filled enough of this gap that we can say that, yeah, the gap is filled. And look how nicely it's moving off this 50-day moving average. So if you're looking at getting in Amazon, adding to the position, a couple of ways you could do it. You could wait and see if there's a pullback to the 50-day moving average, and then buy it there, because it looks like somebody is buying this on the 50-day moving average. Or you could, if you think it's going to go now, and it kind of looks like it's got some strength here, maybe you just buy above above Friday's high. Still a little bit of overhead up here, but not looking too bad. Be a little concerned about this 200-day moving average. Meta was the big on Friday. Meta was the big performer of all of the FAANGs. You can see it came off the bottom of this consolidation, this range that it has been in. Came off the bottom of there nicely. The big question now is, now that we're coming into the top of the sort of old original range, does it stall out there like it has so many times before, or does it continue higher and move up to the top of this expanded range? If it can move up to the top of this expanded range, that would definitely have me a little more interested in this. That would definitely be a lot healthier. If it rolls over, either after hitting the top of this old range or even rolled over tomorrow, that would not be healthy. That would not be bullish at all. Netflix. Okay, so we've been watching this consolidation. It feels like forever now. But you can see now we're at the top of it, and we're about to attempt, I imagine, to go into this gap. So the big question is, do we go into this gap? So we're expecting, or if you're following my thesis on the market, the CPI and everything, we're expecting a bit of a down day, or a sideways day. So maybe that's what we see here. And if we printed a nice tight little inside day on tomorrow, inside this tight little candle, I'd be all over buying a breakout from that on Tuesday. So this is looking really interesting here. It looks like we're getting very close to pulling the trigger on this, but we've also been here before and failed at this level. So we've got to be cautious. We don't want to be front running it, but I think that when this does finally break out and starts getting into this great big gap up here, I think we could see some really strong and fast movement. So we've got to really, we've got to be careful with our timing on the entry on this, and we don't want to, what we don't want to see is a big gap up that kind of makes us wonder if you even want to get in it. Watching Netflix closely. Google. It would be nice to see Google and Microsoft being a little stronger than they are. We can see that it did respect its little, the bottom of the channel here. So that's very positive. We had talked about this. We had talked about how mean reversion traders would want to buy when it gets to the bottom of the channel. And sure enough, they did. But is there enough power now for it to get out of this consolidation? I mean, you can see how there's a lot of resistance right there. It was unable to get above this for 1, 2, 3, 4, 5, and now 6 days. This is turning into a fair bit of resistance. So we need to see that break out of there. But again, maybe we get a nice little tight day just under that tomorrow, and then break out of there on Tuesday. That would be a nice move. That'd be a pretty decent little play there. So Google's one of the ones that you want to keep an eye on. Tesla. So Tesla, made a nice turn, a little double bottom here, nice little hammer, a couple of nice hammers actually. And again, behaving well off that 50-day moving average. Got through what was potential resistance and got through the 21-day moving average, closed above the 200-day moving average. You got to be bullish on this, right? You got to be bullish at least up until this 314.50 area. So it'd be interesting to see what happens to Tesla over the next couple of days. Semiconductors. So they put in a nice little bottom here. You can see 1, 2, 3. even little fourth one, a little bit higher, and then a nice big gap. We should probably draw that gap in because as volatile as semiconductors are, you know, we may come down and test that gap. So we'll have that drawn in for next time, and you can see there's a fair bit of resistance overhead, but this is, you know, this is a nice turn up here. What we really need to really needed to see out of semiconductors. The big name we watch there, of course, or have been watching lately, is NVDA, and it also has made a little move off the bottom. That's a nice little bottoming pattern there with, you know, a bunch of lows in the same area, and we're now into the gap. So it'd be nice to see this continue to fill the gap. Maybe we come up to the top of the gap here, consolidate for a couple of days, and then break out of that. XLV Healthcare, it seems to be perking up a little bit. We had a nice move off the lows here, fairly strong. We'll be coming into some resistance soon, but you know, it could have a run all the way to 134. I think if you know, general healthcare continues to run, then I think we could see, you know, some interesting action out of XBI. It hasn't been ideal. I don't like this doji right at the 200-day moving average, but at least it didn't turn into a big red candle when it hit there, or, you know, do something like this. This is not what we want to see. When it, you know, this last time it hit the 200-day, there was also a trend line there as well. Yeah, if this can maybe, you know, put in one more sideways day and then break out of there, that'd be great. And then, you know, that would be good for, there is one biotech play I want to take a close look at. You could also play, this with an ETF called LABU. It's a triple leveraged LABU. It's more of a pharma play, but, it is a biotech play. There is some pharma in it as well. And this is a triple leverage, so if there's going to be a quick move, or you think there's going to be a quick move on a breakout or something, this is a nice one to play that space. A biotech that I really like this pattern on this one. You can see here now, this is Editas. The ticker is EDIT. You can see this nice series of lows here. Good little bottoming pattern there, and, you know, right at the 100-day moving average. We had a big strong day on Wednesday, moved up a little more on Thursday, and then we consolidated yesterday, basically inside the range of the day before and right under resistance. We've got the 50-day moving average there, and so I guess actually on Friday we closed below the 50-day moving average, but we did close above the 21-day moving average. This thing looks primed to go. You know, and I really kind of think that if the market behaves, so ideally what would happen is, you know, we get a little more sideways, another tight little day up in here tomorrow, and then Tuesday after the CPI, this breaks out to the upside. We may find a little bit of resistance up here at around the $18 level where the 200-day moving average is, but I think this thing has got a good shot at getting through there as well and going all the way to 20. So that'll be a decent little play for us. So put this one on your list. Keep an eye on this for a breakout. REITs, I think we're not terribly exciting. Yeah, they've come off the bottom a little bit, but you know, in playing with this cluster of moving averages right now. Staples, I don't think there was anything exciting going on here. No, not so much. Looks like Staples are finding resistance here, and I'm okay with that. I mean, I don't want Staples to be the strongest sector in the market. I want to see the market have a little more risk appetite. And utilities. Utilities have just been a monster, coming back up into the all-time high. But putting in some indecisive little doji kind of candles up there. So again, you know, I mean, the utilities are so defensive, they're not really the kind of thing that we want to see leading the market. We want to see more, you know, riskier growth stocks and that sort of thing lead the market. So I'm okay if this rolls over here, because I think if this does roll over, we could see money start moving into you know, technology and communications and biotech and those sort of things. Okay, so another couple of potential plays. These are not setups. These are not things to go and buy tomorrow or anything like that. Pins perhaps, maybe. But you've got to remember that this has already had a pretty decent move. So this gapped up on Friday. It was up 6.5%. There's talk of pins being an acquisition target. So it's getting a fair bit of attention. I think that we've got this big kind of wide zone of resistance here. So I think that what we want to see is maybe over the next few days it come up and kind of stall out under here, let the news cool down a little bit, and then maybe it tries to break through. If the rumors of acquisition are true, the problem here is that it's going to gap up. If tomorrow is a consolidation day, that might give us a chance to maybe buy some kind of YOLO options or something like that. Maybe this is something we'll discuss in the Discord. See if we can find some decent options that we could buy so that we can play for a potential takeover of this company. If tomorrow is sideways, then some of the volatility, because with a strong move up like this, volatility will have jumped up. Even though we're used to seeing volatility go down as stocks rise, when they rise quickly like this, volatility rises. So a sideways day would bring volatility back down, and I think give us an opportunity to buy some calls on that. If this is your kind of play, if you think there is a good chance somebody comes and buys this company out. Zscaler is one that had a fantastic day on Friday, giant gap up, and right into resistance. So I think in this one, there's almost something for everyone here. Scalpers and day traders will be looking at this probably for a short and maybe early in the morning. And I think that what happens though is I think that if this pulls back a bunch, with the scalpers and day traders shorting it, I think investors are going to be going in here because you can see this big move up is on earnings, right? So I think any kind of pullback in here gets bought. It is risky. I mean, this thing was up 22% on Friday, so it's not something we really want to jump in on. I think if this just goes on Monday and breaks out of here without pulling back at all, it's a no-go, because I think if it does break out of here, it's going to fail. If it pulls back first and then goes red to green, I think that's definitely something we could play. Sorry, I was distracted by my big board here. I can see that the futures markets have just opened, so we'll actually take a look. What I'm seeing here is actually the index futures have gapped up pretty nicely. The S&P 500 futures are up about 1/3%. The NASDAQ is up almost 0.5%. And oil opened flat but is pulling back a little bit. We'll take a look at these futures contracts in a sec once we get finished with Zscaler here. I want to show you the intraday chart on this. It's clear that day traders were all over this on Friday. There was tons of beautiful setups in here. Now, this would have been hard. Let's look at the after hours here. You can see this is the after hours and pre-market action. You can see how much it went up on earnings. And then it came up and then it pulled back in the pre-market on Friday right in here. This would have been a difficult buy, I think, initially, considering how much it had gapped up. I think there was a lot of risk buying anywhere in here in this first 15 minutes or so. And this is also a 2-minute chart we're looking at, by the way. You can see a lot of these setups a lot better on this 2-minute chart. Okay, so the first setup in this is when you get this big, strong move up and you start to consolidate. Now, very aggressive traders would have jumped on, once we broke out above here. I think smarter traders, slightly more conservative traders, jumped in this candle. Once it broke out above these two, it jumped in there, and you got a nice move there. Then we've got another nice consolidation, another nice bull flag. You can see you would just draw a trend line there, and you can jump in when you break the trend line. You can jump in when you break above that little series of highs there. So lots of opportunities there to get in, right? And then it put in another consolidation, and it kind of it tried to fake out a little bit to the downside, but look where we bounced. Right where we expected. These lines, this S1, S2, S3, these I drew in the pre-market on Friday. And it's nice when it does kind of obey those lines a little bit. So yeah, this could have been another consolidation. You could have got another kind of flag pattern. You could have got in here. This consolidation right here is beautiful. If you're not buying that, you're not a day trader. And even though it didn't work out immediately, it even came back and gave you a second chance at that one. And another consolidation. You can see the traders bought it there, and it continued on its way up. Pullback got a little deep here though, but they did buy it back up into the close. And again, another another bull flag here. So you can see there were so many opportunities to play this all day long. You could have been in and out of this in this. So I think you're going to get opportunities like that on both the short and long side in Zscaler on Monday. I think this is going to be an excellent second day play. All right, so that's all our setups and things that we want to keep an eye on. Why don't we quickly just look at the index futures here. You can see, and again, we're looking at a 2-minute chart in the middle here. So you can see a nice gap up. It's well above the high from Friday, and well above, and we pulled back on Friday. We pulled back into the close, which is no surprise, right? After a nice move up the way we had, the way we did all week, that it pulled back a little into the close. People taking profit shouldn't be surprising at all. It's nice to see us gapping up above that Friday high, though. Be awesome if that holds into tomorrow morning. You can see the NASDAQ is even stronger. It's now up 0.6%. So this is, a nice little move here. Let's take a look at crude oil now and see where that has come down just a bit. Oh, that's weird. Why does it say that's down 0.59, but it looks like it gapped up? Yeah, I'm not sure why that's what's going on here. I think it's got something to do with the hours of the futures market in crude. But you can see from that after hours close in crude, we have gapped up a little bit and look to maybe be moving a little higher. So that's good. And we can also see that natural gas is also moving higher. This is one of the ones that we were concerned about. If we go back and look at the daily chart, we were concerned about natural gas breaking out the downside of this bear flag. So this is good. It looks like it's going to attack the the highs in this bear flag. So with any luck, breaks out the upside of that. All right, I think that is all I've got for you guys. Let's see what we've got coming up next week. So we have now moved Ticker Talk onto Wednesdays at 7 p.m. Eastern. And you can see that we will have our next Ticker Talk is on Wednesday the 14th. So hopefully we will see you all there. And I hope you enjoy the rest of your weekend. And we'll see you all in the Discord tomorrow. Thanks, everybody.